Hey guys, welcome back to Financial Finish J. I'm Julio Dawkins.
And I'm Jade Harrison.
And guys, today we're gonna clear up some stuff that we have been talking about for the past couple of weeks. We're gonna fully go into the stock market. Today Mr. Harrison will lead us on the discussion. I know he has a lot to say. Jade, for the first thing, when starting your portfolio, like the jump exactly, what are the things that you should find out about whatever is going on as well as yourself?
All right. Today I'm going to spend the time to actually go through my own portfolio. But the thing, if you're asking about how do you start, it's about the things that we have been speaking about for, I don't know how long I've been doing this, but for some while, it feels like many years.
Yeah,
but the budget, saving, and now you're at the point of investing.
Correct.
So you have accumulated some funds and you're now ready to do something.
Right.
So now when you're ready to actually invest, stock market or otherwise, you have to evaluate, you have to do a self-evaluation. Who are you as an investor? You can actually just use some standard points like your age, your ethics, how you view the world, and that might dictate what you invest in and what you do invest in. Do you care about the environment? You don't care about the environment? Do you care about political issues? You have to take all this into consideration.
So Jade, what you're saying, it's not just what is going on, but you yourself as a
man,
person.
you are the key and the most important factor in investing. Because if you don't have control over yourself, you don't have control over anything else.
Right.
And investing is about discipline and self-control.
Right.
And having a clear goal and a vision about how you want to do this thing. Now that's the only way you're going to be able to last and deal with the ups and the downs that exist in any market.
That is true.
So it has your stress tolerance, you have to know yourself. So it's all about knowing yourself. You know your available resources because you would have budgeted, you would have saved, and you would have accumulated what is the minimum requirement or sometimes more. Also, your investment timeline. Are you 20? Are you 30? You understand? Are you 50? Are you retired? That's going to dictate how you approach all investing activities. So, based on your risk tolerance now, you're going to say high risk, low risk, medium risk. What do I want? Do I want a mix?
Right.
Sometimes people dictate that by age in investment cycle, but it can also be just you making a determination as a person, even if you're 80, what kind of risk you want. You understand? And in terms of how you choose to invest or how you might have your other resources out there already. So you might suppose you're at older age, you'd have already invested some of your money in something. So probably fixed income, you have your pension, you have certain other investments that you want to do, a new investment, or you have no investment and you want to start, or you feel like you're behind and you're willing to take that risk to take on the risk that you can get the greater reward. So you have to evaluate those things. Are you going to be looking at growth stocks, which are more risky? You want to look at dividend plays so that you can get cash flow so you can live off your investments. Are you going to be looking at managed funds there are combinations of these things that I'm giving you.
Right.
But like a managed fund, no, you don't necessarily need as much investment knowledge because you're not managing every single detail of your portfolio. You're buying into a collection, a pool of stocks that are, in terms of risk, creating a basket that you want based on your initially established risk parameters.
Going into a little bit more detail, do blue chip stocks drive those pools of stocks?
It all depends because you have specialized funds, you have exchange, people might be hearing of ETFs, exchange traded funds, you have mutual funds, you have index funds. So it's really what you're looking for. There are many different funds for anything that there are actually technology funds, there are actually individual investment houses that have their own funds like ARK Invest, which is an innovation fund that you can buy into, where that fund is mainly geared at investing in innovative stocks and innovative companies. So that might be a bit more risky on the technology side. You have the S&P 500, you have some companies that have funds that match the S&P 500 and they manage that. They don't do anything outside of that. So once a stock is qualified for S&P 500, they're going to match that. And just maintain that portfolio, and then what you're looking for there is just general market, moving with the market.
So basically you're saying it's not really blue chip that drives these funds.
They do it because of the market cap. They do, but not in the way that you just said blue chips alone. But they are normally, a blue chip is normally a significant size company that's been around, established, has been creating returns for many years.
Which we have discussed.
We did discuss that. So guys, watch the videos, guys, making sure, because this video is going to go a bit more in depth. Right? So blue chips are a significant part of the market.
Right.
And that's just how it has always been because that's a larger, stronger, more stable company.
Correct.
You understand? So you might those companies sometimes nowadays you can get big returns from them since Corona. You're getting some large returns from blue chips, but that's not normally the case. Normally people looking for like dividends. You understand? And things like that from stable income and cash flow. So that's if that's what you're investing for. Like I want to be able to have money to live off every month or every 3 months. You can structure your own portfolio to provide cash in certain increments. So there's actually a lot to it, and guys, I encourage you to leave the question in the comments below that we can address them because we're going to miss some things, but we're going to capture a lot of things. Alright? So how do I or you go about investing in any single stock? Because the reality is that there are a large number of stocks. Because not infinite, because that's like bonds, right? Because they're always creating new bonds, but stocks finite but large amounts. So how do you filter through these large amounts of stock? Because like every company, there are a number of publicly listed companies.
Correct.
Thousands. So how do you choose one? Because you have $100 or you have, say for example, we're going to refer to my portfolio as a base of 100,000 US. So if you have 100,000 US, fine, you still can invest in the entire stock market. Because that might be a lot of money for some people and a little bit of money for some people. But in general, you need to have a filter. So that's where you're going to start as a stock investor. If you're going to be picky, which is not for a person who is not willing to put in the work. If you're not willing to put in that intense labor at the beginning, invest in a fund. Find a fund that matches your outlook, your risk, and invest in that. And that can be very profitable as well.
Yes,
it can be in some cases. Of course, you're going to have the crashes, you're going to have to deal with the market crashes, but there's a time and a place for everything. So, first of all, the first thing you want to do is invest in a stock. You need to look at what you do every day, what products and services you use, and how do you have any companies in your immediate space that you see value in. So for example, let me just give some quick examples. Everybody uses Google. Google as a stock. What do you think about Google? So you can start there. I know Google. I know Google has great products. I know Google is always looking towards the future. And then you can take that, boom, you can go to the internet, you can start searching for third-party information. You can go to Google site, you can go to the publicly listed financials, you can actually go to, there are many websites that give charting data. You can
over time, how the stock
yes, and give you like the fundamental breakdown. I'll go down into that later. But that's the point is that it's something that is right at your fingertips, something that you're using.
What about in Jamaica? Give an example, like a good example for.
Well, you have Grace. Everybody eat Grace products. You know, sir, me Grace products, Grace are quality products. You can buy some Grace stock because we think Grace now ever disappear. And then based on that notion, you go on to do more research. You understand?
And new items that they might be coming out with.
Yeah, so like based on the initial notion, you're now going to look into what they're actually doing and what are the future prospects. So what the point is to invest in what you know and what you're familiar with, and then make yourself an expert on what you already know about and what you're already familiar with. Even more so if you're working in a space, so you're aware of a specific industry and the tools used in that industry. So for example, you're saying that Sony, I'm going to invest in Sony. Or for example, we had Pivot Rattigan, that does the productions and the online and data creation and content creation. He would know about the tools and the equipment necessary. So he might say, wow, Sony just released this new camera. This is going to be a game changer. So let me look at Sony and see what's going on with the financials, what's going on with the company who say that. But you have to take these cues in your life. Understand? And don't hear you say what's happening locally and what you invest in local. Do not limit yourself to Jamaica people. It's a problem. Remember, we're world citizens. So say
all the time.
So have to be thinking globally. Think about pushing yourself outside.
Beyond.
You understand?
The walls of Jamaica.
For true diversification, we're going to try and see if we can go to the international market.
Correct.
Right? We can start locally, but even more so now, we are going to be more significantly impacted than the international markets because we're a third world economy. So our companies out here, blue chip or not, are going to suffer to a greater extent than the blue chips overseas. So if you can reach into that market, do not limit yourself mentally. You understand? Because we're talking about investing on a general term. So
global citizens.
Global citizens. Right? So apart from knowing what's going on around you, what you know about, and trying to become an expert on that, you also need to recognize now what's going on in the market itself.
So,
So in
the external factors then. No?
yes, exogenous factors.
Mm-hmm.
Things that you don't necessarily have control, but they're affecting everything.
Right.
AKA COVID-19.
Right?
Right? So for now, that's the clearest example you can get. You understand? So a lot of companies that were thriving before, some have disappeared.
My friend, any stocks locally or abroad that you saw
I
that
kill it with
fell?
abroad because he's an abroad person.
That's fine. That where the stock pre-COVID was climbing,
Airbnb.
Crash.
No, but people not jumping to live in somebody's place right now.
Mm-hmm.
So it's like even the CEO was saying 12 years of hard work.
Mm-hmm.
I'm not sure if I quote him properly. It's just gone in like 6 months.
He said something like that. I heard that.
Yeah? So you have things like Uber and things like that are suffering.
Yeah.
Any kind of shared workspace. You have a stock that was about sharing workspaces. I think it's Workforce. I'm not sure the name.
Can't remember.
Because you're going to find that you won't know everything about every stock.
Right.
And you don't need to. Because this is what we're trying to develop. We're trying to develop our filter. To just take out all the noise and get to what we can do and do that as best as we can do that. Unless you're going to become an actual trader 9 to 5 portfolio manager. That's not our aim.
No.
Right? So there are a number of companies that have been impacted. And then there's even the positive side, Amazon.
I see. Right.
You see where Amazon is just spiked down to the sky. You understand? And I'm telling you folks, as much as it may seem expensive, I recall a few years ago I looked at Google $100 and I was like, I don't spend that. That's too expensive. Can't afford that. Google, I want to go find who feel like an ass. I should have bought it.
Right,
you understand? Because I understood the fundamentals, but based on the stock price,
you were like, no.
Yeah, and of course income level and savings and so you did the first part of the assessment.
The first part of the assessment where
you're trying to say, okay, let me get something with a smaller absolute price on the stock, so I can try and spread myself with something. So I didn't invest in that, which I regret. So I have to look at also that now, the give and take in that. So you might not want to invest all your money in a big stock, but you want to invest some money in a stock with a high price.
Right.
For example, now you have Tesla. Tesla is doing a 4-to-1 stock split, and so the price of Tesla now is $1,680 the last time I checked, US, right? They're going to split that. And then they're going to split that now, and then the price is going to drop off significantly, and then more persons are more smaller are able to now invest in a Tesla stock. Whereas you couldn't buy one before, now you could buy one because one is now the equivalent of 4 or 5, whatever. Fine? So you have to look at that. But more so, just always don't want to lose the point. You need to know what is going on in the market around you. So what is going on in the world? Alright, look at the biggest hit. Hospitality.
Can you imagine?
Restaurants, hotels, and then on the same side of that, Winnebagos, the wagons that they drive, and the RVs.
Okay.
RVs have almost, people probably don't even know this because it's not going to be something that if you're not researching you're going to see. RVs in the last like 5 or 6 years doubled in terms of the market cap for the RV space because demand is so high. And even more so now coming out of COVID because people are now taking staycations. So what they're doing is they're packing up their family and driving around the same state, driving to a park and spending a week in their RV. So RVs are seeing significant growth. So there are stocks they can buy. I can't believe I don't remember the name of the stocks right now. There are 2 market leaders that are making most of the headway in terms of the RV space because it was very competitive because most of the RVs are made in the Midwest in one specific state. So you see folks, I know this but I don't know everything because right now that's not where my expertise is but an opportunity that I know it.
Right, but you're not a consumer of it right now.
Yes.
So you took the time to understand what is going on.
So I try to understand as much as I can and then I go and look at financials but I also noting now my finances and what is available. Right now I am fully invested with mostly, probably like 95% invested. So I would have to sell something off to go invest in that. So do I think that those RV space is going to give me a greater return than what I already have based on my expertise? I'm not confident in that. Not saying that it won't happen, but I'm saying where my confidence lies.
Right.
Alright? So that's what you need to do. You need to understand the market.
Post-COVID now, Jade. What are the things we should look out for post-COVID? So you started with the RVs.
Post-COVID? Well, you already see it taking place because, as we said earlier in one of our videos, guys, about the stock market and how how pricing works. The stock market prices in the future. So you might see something book value, it's worth $10, but the stock market have it at $15 because people are pricing in their positive view of the future.
Right.
For example,
Confidence,
people are saying that in Tesla, because even the CEO of Tesla, Elon Musk, says he thinks it's overpriced. So he's saying at $1,600, it's overpriced. You understand?
So
but probably at $350, he was like, yeah, it's good. But it's not about him. But it is about him. But we'll go down into that further down. Right? So post-COVID, you're going to see some of the bigger companies getting bigger. And the rich are getting richer.
Right.
It's sad to say, but that is the reality. If you were not prepared, which is why we stress so much on financial fitness, Jay, that you prepare yourself, that you have a plan, that you have dreams, that you have goals, and that you work towards them.
Correct.
Right? So you take into account the personal space, the market space, and global space, and current affairs, and then you're using that as an additional filter. Right? So we're just creating a big filter. So you're looking at also there's an approach I would take before COVID-19. I'd have taken this approach where I look for a distressed sector or an industry. Like for example, banking was failing in there was a bank, Santander. Because I know about banking, so I look at banking and financial stocks.
Right.
It was significantly impaired. But I understand how banking works and I understand that the price is going to fall off. There's going to be some impairment. And if I can I don't want to say time myself, but if I can go in at a price that I feel that it is significantly undervalued, and I can take that opportunity to double up. Like for example, my first foray into the international markets was when I invested in a record, Bank of America.
I remember Bank of America.
People, I could only invest in one stock, and I bought the one stock with the highest level of confidence and the most knowledge and the most understanding of what was going on, how it was taking place, and I bought Bank of America. At the time, I borrowed some money from my father. As give me the loan, I said, give me the loan, I know I got this. And he support me, and I put my savings with that money, and I invested that money, and when I came out up 300%. Not in a year or 2 year, folks, right? So that was like, I think 4 or 5 years. 4 or 5, but the reality is that is ridiculous. That would make me sound like I'm a superstar, right? But he's doing it consistently is the key. It's not about one-offs. But the reality is that at that point in time, I saw where coming out of the crisis, it was significantly undervalued. That was, I think it was priced at, I think it was $11, $11 or less, and it went up to 35. You understand? And I was putting in money at the initial stage, and then I put in some more money, and then I averaged down my cost, so it come down, and I was just managing myself, but I was fully invested in that because that's what I knew, that's what I understood, that's the market I understood, that's where I saw the economy and the global economy going, and I understood banking. So that's why I said stick to your area of confidence and competence. You understand? So because when other people were worried about what is Bank of America going to, Bank of America is not going to disappear. Yes. I'm 100% certain. Probably you can't say that, Julio. I don't know. Yeah, because I'm not necessarily, but I know enough for financial. You know, but probably if it was somebody else, I would say, you're not aware of that, but I know. Banking? You understand? Because of the contagion and the other impacts and the fact that these guys have invested their lives and built these companies, and these monuments, financial very interconnected. Everything is interconnected. Yes. So, and the American government is always willing to prop up its own financial institutions. Whether out of pride or out of just financial prudence. So, you're looking at all those things. So, what you also want to do, once you get to that part where you have your filter now, you want to look at other person's filters. So guys, if you're going to be investing, you want to be looking at buy side and sell side analysts. So basically a person who is looking at the same stock that you have now decided based on what you have cut down your list of stocks. So I normally start with like a 50, sometimes 100 stock. And by the time I filter them through my personal filter, I get down to like 20, 30 stocks. So these stocks in terms of information about them, do you ask a broker or you can actually go online and people actually that's exactly what I'm saying. I'm saying you're going to now look at the buy side and the sell side analysts, meaning the persons, the brokers, or the persons who are researching the stocks at the various financial institutions. They normally post their outlook on a stock, whether on their website or you're going to this, you have to start watching now. If you're saying you're prudent, you have to start watching now. Your CNBC, your Bloomberg, your CNN.
Mad Money.
Yeah, you can watch it. Jim Cramer if you're interested in dating, but you can watch it if you're interested in that. Fine. So you can start watching these guys and start listening to what are their opinions on specific issues surrounding stuff.
Right.
Not just if they're buying or if they're selling it.
But
you want to definitely know to get in from a buyer and a seller.
Correct.
Because you don't want to give yourself a positive bias because I think this is a great stock. So I'm going to listen to everybody who thinks this is a great stock. No, you want to listen to the man that said, fool strategy, that's dumb. And this is why it's dumb.
Right.
Because then you get clarity, because then you should be able to answer or at least rebut what he's saying to say, oh, I can see why you're getting that wrong because you're not aware of this. So it's like a test of your awareness and general knowledge about what you're going to put. And this is your money now, folks. So it's going to take time. You have to invest your effort and your mental capacity into it. Fine? So you're speaking to your brokers, because your brokers is a part of that.
Definitely.
They're analysts, or they have access to the research so they can provide it with the guidance. But, which is what I was saying, the levels of maturity of the market now. Overseas market, you're going to be like 10, 20 people giving buy recommendation and 10, 20 people giving sell recommendation.
One of the things that I tell people about the stock market, Jade, is that some people don't understand financials, company financials. And I always tell people that, you know, if you don't understand company financials, go on YouTube and find out what is a balance sheet. What is a...
I skip all that.
You know why? You know why I say that though, Jade? Because sometimes you can look in our company financials and know that if they make a profit this year, why they make a profit? Because they might sell a lot of their capital. They might have a huge capital disposal.
I understand what you're saying, one off.
And then you're like, oh, this is a great company.
No, but there's no way using the strategy that I give you, filtering through that you, because one, you would have picked up that one year, because remember earlier when I mentioned that there are charting companies online that give you that information in a charting so you can visually see it. Hypercharts.co. You can pay for, or you can get free what is available.
What is available for free?
So it will literally list out different data points relevant to different companies. I've used that for Tesla, so I can speak to that for Tesla. So it will give you all the regular fundamental financial stuff, and it will also go as far as breaking down how many vehicles they deliver this quarter. So it gives you even more information, but in a visual format. So you're able to make a more informed decision or a more informed look, a deeper look at what you're doing without actually fully necessarily. You don't need to understand everything like an accountant.
No, you don't.
Understand the implications and the significance of each data point relative to the equity that you're looking at. Because some financials may look different depending on the industry and the standards applied across the industry. I think you don't have time like a broker to go through all that.
And there's no way you're going to have time like a broker to go there. But when the broker says to you, listen, on the income side, on the expense side, you must know what these points are.
Yeah, man, I agree with you, but I'm saying.
But not to comb through our financials
because
yourself.
I just explained to you, start with 100 stocks in.
True.
So you can't like 100 stocks.
What, you reach to the point where you do it for the 20 or even 10 or 5.
But
you get
that's
what I'm
why
saying?
we do it for reach your stage.
Right, okay, cool.
Now bring it down through the filter, because when you watch this video, you should be able to invest.
Producer, put the filter right here. Put the funnel right here.
You should be able to feel secure about how you go. I'm giving you a template about where you can go about investing your money. Fine? Without picking exact stock and giving it, but I'm going to go into my stocks and then give you even more consideration of that you have to put in when you're going to actually, because when you have your money in your wallet, you actually say, I put 10,000 US on this. I put 1,000 US on this. Oh, you make the decision here.
Yeah.
You understand?
That is it.
Yeah, so your level of confidence you have to develop a logical way to establish that.
Guys, Jade Filter Harrison is going to show you.
Right? Yeah, so what filter, right?
Yeah.
So coming out of that now, you have 30 stocks. But you cut down from 100. It's not gonna be as easy as you think. You have to do it bro.
Yeah.
Right? Then you say, alright, fine. How much money do I have? How much stocks do I want in my portfolio? Yeah, right? So that's a decision you have to make. Are you gonna try and you're not trying to match an S&P, so establish that you're not trying to match one of these large funds. You can invest in that. If you want, you can take some of your portion, 10% of my money I'll put in a fund. Because I don't want that risk to be low.
Right.
So you're trying to diversify your risk away.
Right.
Fine? So you're saying, alright, I want to choose 10 stocks, 20 stocks. Because Warren Buffett said people who seek to diversify are people who are uneducated about the industry and about the equity and the stocks.
So they're spreading their risk.
So they have to spread, try and diversify. But if you fully understand your risk, you should be able to invest in the right stock with the right fundamentals and stay confident that you will make returns. If you understand. Now, we know everybody's not going to understand on that level. So that's why we're going to say you have to find your balance. 1 stock or 30. 1 stock or 10 stocks. Remember, I took my big risk and I went to Bank of America because I know with a great degree.
And you bought the one stock.
I bought the 1 stock. You understand? And I made that return on that 1 stock. And that's not like, it's not like a decision that you make today and tomorrow you have to live with it. I have to live with that for 5 years.
You know what is that? That's not a gem. That's a diamond.
It's a diamond.
My friend is going hard. These are diamonds, my friend. But in the meantime, please, if you like this video so far,
share,
like,
subscribe.
Ring the bell too. Okay, guys?
We're going to keep going, right? Because, folks, this is very important because this is like years of my life I take developing the filter.
Correct.
Right? And I'm telling you, it's not rocket science. And even my brokers ask me, how do I pick stocks? And I would tell them, say, I just read. I don't give them this breakdown. So take this breakdown and use it. It's very valuable. Because the brokers that I deal with sometimes, like, how you pick that stock there? How you know that was going to happen, Jade? Because I spent the time.
Right.
And I spend the energy and I run through the filter. And then I manage myself as I go along. And I say, all right, good. Keep tracking. Sharp. Right? So, for me, I don't have a lot of money. I don't want to spread myself too thin because there are things like you have to look at transaction costs. If you were living overseas, you could have used various apps like Robinhood, Webull, or something like that. I don't remember the correct name of it. I think that's the name. So the Robinhood was making crazy money now because what they are doing is allow people to trade with very little commissions on the transaction. But where I do my transaction cost is like 25 US per trade. So I'm not going to be doing 50 trades.
No.
So first of all, I'm not a day trader. So folks have established that in your restaurants. Am I a day trader? Am I going to be buying and selling stocks all the time? Or am I an investor? I am an investor. I ascribe to that. Guys, click the link below for the book. Investors. Yeah, that's where I'm coming from. I'm coming from an investor standpoint. So I'm buying something to hold because I see value for it in the future. Whether it be medium term or long term. I'm not a very short term person.
No.
Fine? So you have to decide. So I say, all right, based on my level of confidence and my knowledge, I don't think I need 100 stocks or 30 stocks. I think I can go with 10. I think I'm comfortable with 10.
10 is a good set for your profile.
And then you have other rules that over the years and through wise people investing and through how funds manage themselves and risk parameter, you pick up certain rules like I don't want more than 10% in any one stock. You understand? And then you tweak that rule to suit yourself. But as a general guideline, you don't want to invest in more than 10% of your money. So if you have 100,000 US, you don't want more than 10,000 US in one stock. Unless that stock is special, and then you have to verify that and validate that for yourself to say, all right, this is why I think this stock is going to be more than 10%, and it will only be smart to invest more money in this.
So as you go along with your filter, you make certain what we call rules or stipulation or guidelines.
I have to stick to them. But once you make a decision, you buy it. In my case, I'm not buying or selling, I'm buying it and that's it. Because I would have known everything I want to know to give me an outlook to at least 3 to 5 years in the future.
Right.
That's like my average timeline. And some things I might never sell. But with the Bank of America is what I use now to fund what I'm currently doing. You understand? You assign yourself the rules. But then now you're going to look at what's the opportunity that exists for this stock. And Tyler will know my level of confidence. Does this stock have great future prospects? Is it going to grow a lot? Or is it a stock that I'm looking at to stay stable?
Right.
Is it significantly underpriced because that sector was crashing? Or that specific bank was suffering from some ailment which understand that they are fixed, but people are not going to price in it because people are wary of that risk. But you understand that you are willing to bear that risk for the next. Because some people might say, I'm not investing in that now. Because they might take go next year. You have to go 5 years.
True.
5 years time, total turnaround by the time that you have outlasted all those people and you have entered at a point where you are certain to an extent of the amount of return you can make from that. Because you're looking at opportunity cost and you're looking at if I invest my money for 3 years, would I have wasted? Because 3 years I could have started a business.
True. And
could have made 200-300% and selling, I don't know, a bag juice, a headphone, a computer, starting a show. Which is why we also at Financial Fitness J encourage you to start your own business. Start your own business. Start. Get the guy. No! Do it! So get the guy that put him on person.
Just do it!
So you have certain things. But additional filters that people might undervalue, but they are significant. When you're looking at stocks, look at what is in the news. Because believe it or not, you have some stocks or some companies that are really good. And these really good companies with really good fundamentals should be spiking up in price. But if nobody knows about the company, folks, if nobody knows, it's not going to go anywhere. Could be the best company. If people don't pick it up and realize and the market don't push the funds, if the capital don't flow into it, you own a great stock that is very cheap and you make no money and you will be like, well, I did everything right. I understood what is a expense and what is income and all these things. So I said, don't just use one thing in isolation, but you need, same way like as Uli recommended, you need to understand all these things, but they do not dictate your end decision.
No, one alone.
It's a whole process and a whole conglomeration of indicators that you're going to use to make that decision. So what is in the news? Fine?
That is important.
So you might say, again by Amazon now, because I know I use Amazon. I buy products, everybody are shipping products. Meal pack I get rich off, OT off fight. Ship me, I get rich off fight. The amount of shipping companies here coming, everybody are shop on Amazon. Right? And then I say, 10 years from now, is Amazon going to get smaller? Is the internet going to disappear? People going to want to go back and walk into stores?
No.
You understand? And it is in the news. You understand? And then you're also, that brings me to my next factor now. You're looking at the CEO. So, people might say it shouldn't matter, but the fact is that if you're looking at where the possible growth is and the possibilities are, and you want that X factor, the CEO matters.
Because
we have
Amazon
seen that
going
many
into
times.
foods now.
Yes, so you can see that Jeff Bezos is a very methodical and stable individual with a vision and a backbone to stick it out. Because at the point, Amazon was losing a lot of money when they initially, for a good time, they were investing, which is what you are talking about. They were investing in the back office. So you have to put your trust in a CEO that has that kind of vision, that proven track record, and has the eye of the public to drive capital into it. And also the company. Another key indicator you can use is the company or is the equity that you're looking to invest in. Is it doing something to change the world?
And that is where Tesla comes in, right?
You understand? It's Amazon too.
Yeah.
Tesla, Amazon, company like Uber too, Airbnb, these are companies before COVID, they were changing the world. So that's why you saw that exponential kind of growth in terms of their trajectory. Because you have to look at companies that are charting the future. And you can also look at other companies that are stable and making money in traditional ways. But a lot of the times, if you're looking for greater return, you're looking for the companies that are changing the world. And I have some stalwarts that have been around and continue to grow. But some of those stocks eventually, depending on the life cycle of the actual company, it might be in a very stable environment and it might just be a good dividend play where you invest in it to get the cash flows and the dividends that they have proven that they can deliver over many, many years.